Thank you for joining us. So first, a quick introduction to our guests. We have Rue Rogers, founding partner of Utopia Capital. They're active investing in Africa, Southeast Asia, and the Middle East. Also welcoming Simon Sharp, partner of Global Ventures, focused on investing growth stage tech startups, emerging markets with 70 portfolio companies in the Middle East and Africa, and William Balbeam. So yeah, thank you for joining us again, and I'd like to firstly kick off asking each of you to give us a quick highlight on any recent investments and why you invested in them. Would you like to begin, Rue?
Hi, can you hear me? Yes. My name is Rue Rogers. It's really nice to meet you all. As was said, we have funds in Africa. We're the largest pre-seed and seed venture platform on the continent. And we've extended to Southeast Asia a year and a half ago, where we are one of the very few climate funds for pre-seed investing in Southeast Asia, and we're coming here to the Middle East. I think I've chosen two businesses, one which has been very successful in Africa, based out of Kenya, Powered by People. Powered by People is run by a female founder who saw that most artisanal manufacturing in Kenya was run by small shops of women, 5 to 6 people producing products that often have very short terms of access to liquidity and capital, and is often taken by middlemen, men, and then sold at a premium, mostly because of their ability also to provide capital and logistics. And she digitized all these very small groups of manufacturers and producers. I managed to sort of create an inventory list so that purchasers could directly purchase from them and provide them liquidity to actually manufacture and produce, and then sort of upscale their business model and their manufacturing. They've now taken that outside of Kenya to Pakistan, Bangladesh, and extended globally as a whole. It's a highly impactful program and business, a very profitable business, and a really exciting one in terms of its target market and who they're facing. In Southeast Asia, we invested in a business called Arcadia. Arcadia is an AI-driven platform that is literally mapping sort of carbon forests so that they can offset carbon credits. It's run by an exceptional entrepreneur who I truly believe in, and if you sort of are entrepreneur-led in your investing, you would immediately invest in Ruben. And his business has come under massive crisis because of change of power in the United States 3 months ago. And so the reason I chose that business is, in my opinion, the shift of the political economic climate plus the shift of technology and AI means that things that we thought were great 4 months ago, 5 months ago, are in a very different world. And as a portfolio manager, we're working that out and learning from that.
Simon?
Yeah, happy to jump in next. So just to add to what we said about Global Ventures earlier, so we're a sector agnostic Series A VC fund. We're about 400 million under management, and as was Kelly mentioned, about 70 portfolio companies. Really tough to ask for one or two, but I'll talk about some of the recent ones. And I think following on from the sort of supply chain trend that William was mentioned, one of them is Immensa, so a UAE HQ company that's expanded into Saudi as well. So supply chain tech company focused on additive manufacturing. So the first thing that comes to mind there is 3D printing. They do parts of that, but where they really differentiate themselves as a company is they do digitization of spare parts. Really focused on the oil and gas industry to start with. So just think the size of some of the operations of these. One part could bring down a facility for a period of time. And so how do they solve that? Well, they solve that by storing multiple number of parts at scale. So they could be holding hundreds of thousands of spare parts for a whole oil refinery, as an example. And so they have to hold those, they have to buy those, which cost tens to hundreds of millions of dollars globally. They then have to store them in warehouses, which comes with huge cost as well. So the technology that Immensa brings is they can digitize that part from an architecture perspective, from a material perspective, and therefore you can print these parts on demand, just in time, and when everyone then starts to have 3D printing down the line, you can do that on site. So it has huge efficiency savings from a supply chain perspective, and saves huge amounts of capital and time from a company perspective. So that's Immensa. I think I covered hopefully why we like that company. The second one, also on the supply chain side, is a company called Locad. actually based out of Singapore, recently expanded into the GCC, which is where we play a role. So it's a fourth-party logistics company that basically is the back-end logistics for e-commerce. So again, they supply any e-commerce online merchant from the point at which a consumer clicks buy. They deal with that supply from the inventory all the way through to delivery. So from a supply chain perspective, that's everything from that first mile, where the inventory is held, in the middle mile. Again, it's a very complicated process for a number of brands, particularly global brands who are their clients, the likes of Levi's and others, where you store them, how you store them, making sure you don't run out in particular locations. They solve that entire pain process. And ensure that the customer has a good experience at the same time. So yeah, they're two that I wanted to touch on.
Thank you, Simon. So William's already shared about some of the startups. So I'll move on to the second question. So William, what trends are you seeing in investment this year, particularly in the Middle East and Africa?
Yeah, so if you look at where all the capital is going globally, AI is basically sort of eating the world. I mean, we've been quite actively investing in AI since 2016, 2017, just because of our background in China. If you are not leveraging AI, then you're not competitive, right? So what we've always been focused on, and people used to make fun of it, we don't do chips, by the way, but within AI, there's generally models, and then there's data, and then there's solving an industry problem. And for the last 4 or 5 years, everybody's been focused on the models. I mean, as early stage investors, we have not been focused on the models. We've been focused on wrappers, which is why people are mostly making fun of us. Because, oh, you're just a wrapper, you're not really an AI company. But because of what's happened with the commoditization of the models or the openness of the models, the real moat is actually in the wrappers. So we have companies that have very, very unique data. And then they're solving a real industry problem, from DXWand, who expanded from Egypt across the GCC, to even a company called Flexi, which has one of the only 4 usable smartphone keyboards that's in the world. So one's owned by Apple, one's owned by Google, and one's owned by Microsoft. And the 4th one, the only independent one in the world, is Flexi. And why is that important? If you want to train personalized AI, you need input data, and that's either voice or computer, which nobody really uses anymore, or your smartphone keyboard. And so the positioning is really solving problem, and on top of that, having a unique source, a differentiated source of data in order to train those models.
Thank you, William. So, Ru or Simon, apart from on the AI side, what other trends are you seeing in the Middle East and Africa?
Happy to. So I touched on supply chain, so I won't do that, and I won't carry on the AI. I'll try and do something slightly different. So I think fintech e-commerce continue to be hugely funded sectors here. We will continue to be interested in those as sectors. The economy was largely cash-based even 7-8 years ago, so we've seen a huge shift. And now we're seeing much more sub-vertical growth within the likes of fintech. We've seen some big players like Tabi and others, and Paymob out of Egypt from an infrastructure, or BNPL, the consumer side. So I think we're going to see more maybe on the fintech side, things like robo-wealth management and maybe a lean in towards pensions and things like this, as well as more on the infrastructure, maybe payment architecture. That's starting to play out. And then aside from that, the only other really one that I'll mention now is cybersecurity. I think, again, with the prevalence of AI, the way in which bad actors can operate in that space is hugely effective now. They can automate a number of things that in the past was much more difficult to do. So I think as we look forward, the growth and the advancement in cybersecurity is going to be hugely important to prevent that happening. But also on the other side, I think most encryption tools that you all use and we use as a company is mostly on the 256 encryption side. That's where everything sits today. But we all know quantum computing is coming, and that where brute force doesn't solve that today, it will do in years to come. And so again, maybe not necessarily a trend for the next 12 months, but for the next 3 to 5 years, that's one we're looking at as well.
For us, very similar in terms of portfolio, but I think we're asking ourselves a slightly more existential question at the moment, which is, we're literally, for the first time, about to build a fund here and a studio as well. And we're actually asking what capital can do, right? And what is the role of capital in the world of AI? And I think what we're asking ourselves is like, we've lived in a world for 20 years of investing of very clear stages of sort of concept, pre-seed, seed, et cetera, trying to figure out valuations. It's a very important model from the West into other emerging markets. It's never fit that well, in my opinion. And so there's a really interesting question for us. It's like, you know, are these rounds going to stay relevant? How do we stay relevant in those worlds? And it's actually our competitive advantage not to have to play within that system. Right, and so we've always been so focused on sort of playing the same investment model of going stage to stage, milestone to milestone. But actually, are you going to see entrepreneurs able to leapfrog to go from 0 to Series A in 18 months with one round? And is that going to be a value proposition that entrepreneurs want to see, which is one investor, less time having to hustle, and just somebody to follow them? And so we're asking ourselves much more questions at the moment.
Great. Thank you so much for sharing. I think there's just one little final question, more interest on my side, I guess, is that, you know, touching on AI this year, there's been a lot of investment into AI agents. So just wondering if you are looking into that area and how you see that will contribute to the ecosystem here in the Middle East.
It's not a space we're looking into in terms of agents.
We invested, 4 or 5 years ago in DX1, so they do have an agent. But it's a feature, you know. So if it's basically if you're any type of corporation, you have lots of data, and another way to get more data is to replace a human with an agent. And so they're taking the data from wherever it comes from. It could be from an agent, it could be from some like a human agent, or it could be just you know, social media. Mining all the communication. But the key is not so much just like how do you collect the data, but what do you do with it? Can you turn that into insights? Can you turn that data into money? Can you, you know, one of the challenges with Kareem is you know Kareem. So their customer service team just clears tickets, right? And so they're just focused on clearing tickets. You know, like if you complain, they try and help you. But you know, what happens if there's a lot of tickets from one sector, or there's a lot of tickets having to do with a restaurant or a particular product like laundry or whatever? That data was not being collected and collated, and those challenges were not being communicated over to management. So what was happening is the call center people were actually calling up or messaging saying there's a problem. So they were looking for a solution for a long time. We introduced DX1. They didn't communicate particularly well. So actually, Kareem did not know that DX1 actually solved this problem, which is why you know, communication is key. But Kareem is, I think they built their own solution now. So hopefully you've seen an improvement in their product and their service.
Yeah, and then the only thing I'll add, I think it's more of a broader question on, as investors, I think we now see every pitch has AI somewhere in there. There's always a trend of a period of time. So for our job, if you like, is to differentiate between what's just integrated as a feature that maybe is third party, that yes, they're efficient, making themselves more efficient, they're automating, versus how are they leveraging the data that they've got and how are they actually differentiating themselves in the longer term, not necessarily building models because of the cost that goes in towards that, but maybe that's a longer term play for a company, and actually in the shorter term, a wrapper style solution is more beneficial for the company. So it's more of a broader view.
Great, thank you so much for sharing all the insights and sharing your latest investments. Thank you again, Ru and Simon, for joining us today, and William for coming on stage to share as well.